Greetings and thank you for joining me at FutureMoneyTrends.com. I'm here with a good friend and mentor, David Morgan of the Morgan Report. You can get weekly updates by him on both his opt-in newsletter that is free and a paid newsletter service. If you're serious about commodity investing and just really into furthering and expanding your education, David taught me something very important. He's not a know-it-all, he's a learn-it-all. So you're right there with David looking over his shoulder at the markets. David, thank you so much for joining us.
Daniel, my pleasure. Thank you.
David, I wanted to start us off with basically what's going on with silver and gold right now. I try to buy about 10% with my whatever I make, my earnings. I usually put 10% to gold and silver. I have a kind of its own internal rule that I try to wait for days where the metals are down. Well, obviously, I've had the great pleasure of buying silver at $19, and here we are at 18. So now I'm like, well, should I go ahead and buy at 18, or is something a further drop, something more significant on its way?
Well, that's always tough. Bottom picking is something that I've done reasonably well, but I've been much better at picking the tops than I have the bottoms. I've on record that I said the bottom is in. I said the bottom occurred almost a year ago, the 28th of June, 2013, at an intraday low of 1817. It was a Q reversal day. Q reversal is when there's a down move like that, making an all-time new low, all-time meaning within the day, week, year, month, but in this case it was like in a couple of years, that low. And then it changes and closes above the high of the previous day, and it closed at like $20.06. So we had almost a $2 move in one day. Key reversals are called that because they are key. They happen very rarely, and they usually show an exhaustion bottom or spike low, which is how I like to refer to it. And since then till now, time of this interview, that low is the low. However, to be consistent, I've given my paid members a fair warning on this, so I'll say it publicly. If we close under 19 three times, doesn't have to be 3 days in a row, although it looks like that's what's taking place or has taken place, be very concerned that 1817 low will be tested. So is it going to be tested? Don't know. The market knows. The manipulators, whoever, the market, I'll just say. But what we don't know is, one, will it be tested? But there's a high probability it will, so that's number one. The probability is like 80% that low will be tested. The second probability that we don't know is what happens when it gets there. In other words, will that low hold, or will it not? I don't see it going, I think that low will be tested. I don't see it going much below that. I don't see it, even if it does go below that, let's just take a thought experiment and say, well, let's get a spike low, David. How low could it go? And the answer is, again, no one knows. It could go to 16 as an example. If it were to go to 16, I'm very strong on what would happen. It would get to $16 and maybe make 2 or 3 trades in the futures market. You wouldn't be able to phone up a coin dealer and get coins at that price and instead close the day maybe at 18. It'd be very similar to what I just described that happened about a year ago. It would be an intraday low that was a paper play only, and you wouldn't really be able to take action on it. I don't see a new low happening in the manner that we have been in this last many, many months, where we're just grinding and grinding and grinding along sideways, up a little, down a little, up a little, down a little. Maybe the overall line is slightly down, but it's just grinding sideways to slightly lower day after day, week after week. That is not the kind of bottom that you're going to see if there is a new bottom. The kind of bottom that you're going to see if there's a new bottom is going to be sharp, it's going to be fast, it's going to be immediate, and then it may come up, then it might come back up to that line, grind on for a while, but you're not going to see it go down to 16, establish 16. And I think I don't want to run this interview, but you would ask me, of course, well, David, how can you be so confident, or how can you be sure? Why is that going to be like that?
David, when it comes to the mining companies, are you seeing any company? I know exploration has definitely been cut back, but as far as, is anybody reducing production in their actual mines, maybe delaying the production of a mine? Because essentially now they're just turning the stuff out to sell it at a loss, right?
A lot of them. I mean, I just read the update from Pan American Silver, and I forget, I don't have it here on my desk, but it was like 1940, I think, was their all-in cash sustaining cost, and that's $1 less than it was a year ago or so. So they're very honest about their, all-in costs. And, at 1891, they are unprofitable right now. So yes, they are mining at a loss on a company-wide basis. There may be some mines that are doing better than that and others worse, but on a company-wide basis, they're actually losing money. It's very standard in the industry when prices are right around the total cost, the all-in sustained cost, that they will keep mining. And the reason is that it's better to keep the business going at a slight loss or a manageable loss. I guess I could put manageable in quotation marks, because the industry lost over $1 billion on the whole last year. But it's easier, believe it or not, than to shut down and start up again. There's all kinds of penalties for shutting down, a lot of labor agreements. They have to give them severance and all that. And the mining industry is sort of like an automobile. You don't want to just turn it off and let it set for too long. If you do that, then it's very difficult to start it back up without all kinds of problems. So it's a bunch of mechanized stuff that needs to be working, basically. So what they have done is they basically have gone to a low rate of production, or a standard rate of production, probably a better way to state it, where there's no overtime, no 3 8-hour shifts, forget weekend work. I mean, that kind of thing depends on the mine. I'm speaking in general terms here. There's exceptions, but generally speaking, they're just going to plod along and try to keep their loss as low as possible until the market turns around. And the longer it goes in this direction, then the day of reckoning, comes up. So at some point, the shareholders, the board, combination thereof says, wait a minute, we've lost money for X amount of quarters. What are we doing? But I don't think that's the issue right now. I think that we're going to meander on for another 3 months or so through the typical summer doldrums, and I think the market's going to start to come up. I'm not super optimistic about how fast the market's going to come back, barring a black swan event, which of course I don't rule out because there's so many out there flying around that something could happen at any time. And that's why you really want to be early, and you don't want to focus on how low it can go. You want to focus on whether you have the right amount or not, and in the right form.
Yeah, well, I mean, on the flip side of it, one thing that does concern me in the back of my head, and there's always going to be fear when you're trying to buy low to sell high later on. But, the Dow Jones and the S&P are at highs, and this thing has gone on for now over 5 years. The only thing that keeps hope alive that it's not going to crash is that even MarketWatch.com and some of these commentators are forecasting something. So now it's like, okay, well, if the media is forecasting a pullback, then it's definitely not going to happen this year. But that's kind of a concern out there, like, okay, well, if the stock market pulls back, are we going to see the metals and everything else pull back? And then I guess kind of to tag that along, is it possible, have you considered that the metals are going down because they're forecasting deflation?
Well, that's two questions. First one is, yes, the metals usually sympathize on a big market sell-off, and the reason for that is there's far more money, quote-unquote money, involved in the paper paradigm than in the physical reality. So all these hedge funds, which are largely out of the market, by the way, but hedge fund money managers, mutual funds, all this stuff, when they get the market dumps, they'll sell anything that's liquid. If gold's doing a little better than the market overall, they'll sell it to meet margin calls. There's lots of reasons why you'll see the gold equities go down with the general market, and you also usually see gold and silver do the same thing. Usually it's short-lived, and usually they're the first to turn around. The most negatively correlated asset to the stock market is gold, not gold stocks, and that is something that usually goes the other way, but not immediately, not during the sell-off. So it's something just to take a deep breath and just hold tight on what you have, or buy more if you're brave, and know that gold's negatively correlated to the general equity market, and that over time it will, do do far better. I think Mike Maloney does one of the best jobs on that. If you look at one of his series, I forget which one, but he shows like the stock market going up, and then gold going down, and then gold going up, and the stock market going down, and then he puts these like 3 or 4 charts together and shows you if you bought stocks and held them to here, and then bought gold and held it to here, and then bought stocks again and held it to here, and bought gold. I mean, you would make a lot of money. It's something I addressed with Jim Poplava years ago. But coming back to your question about deflation, yes, it could be. It could be a signal to deflation. But Jim Poplava did a great job of looking at that one summer. I don't speak to Jim personally much anymore. Kind of miss it. But he had taken, this was many summers ago, and he looked, and what he discovered was that there has never been a deflation in a fiat system. All the deflations have been when gold was the money of the realm, so to speak. So this would be the first time where paper trumps gold. And that's the point I make. I mean, I know there's good analysts out there. I know there's one in particular that's written several books on deflation. And, as an Austrian economist, I really shouldn't say that you can have inflation and deflation at the same time. But, common sense kind of shows that. I mean, you can have deflation, if you want to call it deflation. It's not a monetary supply contraction, which is the true definition, but you can see lowering of prices in housing as an example and increased prices for food. And that doesn't really mean there's deflation and inflation at the same time. But the common layman would say, well, yeah, what is going on? So I don't think it's portending a deflationary scenario in a big way. I think it's alluding to or showing a deflationary mindset or situation currently that we are experiencing. I think there's deflation in some areas, and there's other signs that the real inflation rate, using John Williams' shadow stats, of roughly 9%. But we're in a mixed bag, and this is true of a hyperinflationary environment or a deflationary environment. There's a lot of similarities. There's high unemployment, there's high uncertainty, there's a mixed bag of prices. I mean, in the Depression, prices came down, but people couldn't afford them anyway. Because they're broke, and we're in a similar situation here. Maybe not necessarily food prices, but maybe, the electronic goodies are coming down. But I was in Best Buy recently, and I was like, there were less customers in a Best Buy on a Tuesday afternoon than there were Best Buy employees. I was sort of shocked.
Yeah, certainly. I mean, the U.S. economy, it's kind of fake it till you make it, and it seems like people are, or at least the people who could change something in the manipulated data, they seem to be perfectly fine with the U.S. monetary schemes. No one's dumping the dollar or doing anything crazy out there like that to kind of show that the emperor has no clothes. David, I wanted to ask you one last question in closing. We've got about 2 or 3 minutes left, and I'm excited. There's a huge opportunity in the metals. There's a huge opportunity in the mining shares. If you have the courage to buy low, I mean, this is it. We're definitely buying at extreme lows. And I kind of want to basically plug your paid members area. You guys have the best research when it comes to finding the mining stocks. But the exciting thing for me right now, and I hope everyone listening, is that you do not need to buy the speculative plays to make a lot of money over the next few years. You can actually probably buy some of the safest mining companies in the world because everyone has just been crushed. I mean, a very safe miner that I know of, I'm not going to mention the name, but it's gone from 26 and now it's roughly $8. And I just wanted, if you could share with us, you don't have to mention the name, so people have to actually sign up at your newsletter to get the information. But if you could just let us know about maybe one company that you have listed for your paid members, without giving us the name, and just kind of describe maybe a scenario that is so ridiculously bullish that, we're looking for extremes, something, an opportunity for people to where they can expose themselves to the metals, but really not take much risk when it comes to business risk. Not talking about volatility, but the business is sound, and this company is going to do dramatically better than the others when the metals turn around.
Well, there's one in particular that I hold, and it's we favor the royalty companies for a lot of reasons because there's a lot of costs that you know on your balance sheet, your income statement ahead of time. You know, for example, what you are going to be paying for an ounce of silver. You really, I wouldn't say you don't care, but you don't care nearly as much as a primary miner or a base metal miner what the costs are, because that company, it depends upon the costs. But this other one doesn't. It's already got a contract to buy silver at a certain point. And so you're in a situation where you're guaranteed a certain profit. And these royalty companies, one in particular, is just loaded with cash. They're able to buy up assets that are at distressed prices, and they just keep building their balance sheet. I mean, year over year over year. And it's one of those kind of investments that you basically buy and hold for the long term. I mean, when I started looking at investing when I was 16 years old, I studied a lot, and I still do. But to find those type of investments, and giving credit to Warren Buffett, I'm not a big fan. I wrote an article, or I wrote a white paper about Buffett versus his father. His dad was a big sound money guy, and Warren isn't. But anyway, back on point, if you could just compound at 20%, I mean, you can get very, very wealthy in a not very long period of time. But people in the mining industry, especially that do the speculative stocks, we do some, get the idea that, unless you're getting a 10-bagger, you don't know what you're doing type of thing. Those days are gone, Daniel. Those days are over. There will be some like that at the very top of the market, because there'll be a lot of smallish companies that come in to just ride the final wave. But the way to do it is to find a good, strong royalty company with a lot of cash that's got their costs fixed and is making money in today's market, and we have several of them on the list, and buy those and wait until the bottom is definitely in and the market starts up strong. And you'll be paying higher, but you'll be assured of a strong market. You'll be almost guaranteed, I can't use that word, but almost guaranteed that you're getting it at the right time. Even though you're paying a little higher, but you're paying safer. You're not going to lose. And people love to buy something. People, if you really think about it, don't care too much what they pay for anything, as long as whatever price they pay, it's higher the next day. But they really get upset if they buy it and it's lower the next day.
Well, so just morganreport.com or silver-investor, and you can find out about these stocks. It really is, I mean, just looking at this thing historically, or just kind of looking at a chart, anyone can see that this is the low. And as a mutual friend of ours, Rick Rule, says, in order to sell high, you got to buy low. But nobody wants to ever buy low. So, David Morgan, thank you so much for your time. We really appreciate it.
My pleasure. Thank you.